Hello everyone. Today's session we shift gears from abstract theories and models to something much more closer to real world practice, that is the case study approach. Why are case studies so important? Because businesses and policy decisions rarely happen in vacuum. So they unfold in messy, complex environments where numbers, institutions, people, and power dynamics all interact. Case studies allow us to capture this richness in a way that standard models or data sets sometimes cannot fulfill. In this session, we will explore what case studies are and their defining features, how to conduct them, from framing research questions to analyzing and interpreting data, different types of case studies including descriptive case studies, instrumental case studies, and comparative case studies, and finally we will connect this to financial analysis tools that make business case studies sharper and more rigorous. Our goal is not just to learn about cases, but to understand how to use them as future managers, policymakers, and researchers to make sense of complex realities and extract lessons that can guide action. So let us begin by asking what exactly is a case study and why do we use it? So that brings us to our first slide in this session, the case study analysis. So this means the case study analysis means it is an empirical inquiry that is of a bounded case relating to person, organization, event, or program. So a case study is essentially an empirical inquiry that explores a real world phenomenon in depth and in its actual context. So unlike abstract models, it relies on detailed information about a person, institution, event, or program. So in business, case analysis helps practice solving real world problems. For example, analyzing how Tata Motors revived Jaguar Land Rover shows how turnaround strategies are implemented in practice. So in social sciences and public policy, case studies allow us to examine broader issues. So for instance, the household decision making under India's rural employment guarantee programs called MG-NREGA program. But the case studies also have limitations since they are highly context specific. Their findings are often not generalizable. They provide depth rather than breadth. So while they may not be falsifiable like controlled experiments, their strength lies in generating insights and hypotheses that can later be tested with other methods. So having understood what a case study is and its advantages and limitations, let us now turn to the defining characteristics of a strong case study. So you can see here case studies share certain features that make them rigorous. So they begin with a bounded unit of analysis including time, place, actors included, and all have to be clearly defined, and they are guided by specific research questions, so they go beyond mere description. So case studies also rely on multiple sources of evidence such as interviews, documents, or observations using data triangulation to enhance credibility. So they pay attention to context, processes, showing not just outcomes but how events unfolded. So good studies follow a systematic protocol for data collection and use logics like pattern matching or process tracing to connect evidence with proper explanation. So finally, they present findings through narratives and exhibits like timeline or maps, while linking the case to a broader theoretical or managerial implications. So, in short, strong case studies are bounded, systematic and multi-source and analytical. So, what does it take to actually conduct a case study in practice? So, the next slide explain this. So, here you can see that the different steps I have listed different steps involved in conducting a case study. The first one is framing the study. So, framing the study means raising the research questions and along with propositions and the unit of analysis. All these define the case boundary. Then the next step is review of the literature, then identify the research gap, then see what the theory says and identify what are the rival explanation and then refine measures. Then it follows next, after review of existing literature, to situate your case in the broader debates, then explain why you chose this case. That is more important here. Is it representative or unique or critical? So, the results stage involves gathering evidence, collecting data including financial data, interviews and media reports, and finally in the discussion connect your findings back to theory and the larger issues and also to your key research question. So, you can see, for instance, in Nokia's case, the broader lesson was about innovation inertia and ecosystem lock-in, which goes beyond just one company. So, these structured steps can be simplified further into 4 crucial stages. So, let us see them clearly one by one. So, the process boils down into 4 main stages. One is called selecting or defining the case. That means define and bound the case: who, what, where and when. And then the second one is collecting and analyzing data, including both qualitative and quantitative data, including data generated from the documents, interviews, numbers and observations. Then the next step is interpreting the data. So, identifying the patterns and testing ideas. You can use the software here and do some basic tabulation if required. Otherwise, you can just come up with some basic pattern or some pattern in the findings. Then based upon you can further interpret these results. So, then this one should be here. You need to report the interpretations with a clear storyline, starting with the research questions and really identifying what the literature says, what the existing evidence say, then use visuals and actionable insights. So, reporting findings, as I mentioned, linking micro level detail to macro level meaning is essential. So, now let us consider the general methods and guiding principles for designing a good case study. So, I have listed out several general methods. Some of them may be some kind of repetition for you, but what I did that I systematically presented all the methods, but little bit generic in nature. Maybe it may vary from study to study and context to context. When designing a case study, the first one is begin by clarifying the purpose. So, are you exploring a broader issue such as financial inclusion or a specific event like the collapse of ILFS in 2018? You know that ILFS means the Infrastructure Leasing and Financial Service Limited is a public sector Indian state funded infrastructure development and finance company which collapsed in 2018. However, it was revived, bailed out by government and other public sector agencies. So, here the objective should be clear. Does the case provide sufficient evidence and data access? So, a strong design also includes reviewing relevant literature, identifying reliable data sources and often using multiple methods including financial analysis, policy reviews and interviews. And then finally, synthesize the information, that means do the data analysis into a coherent narrative, summarizing findings in a way that answers your question and contributes to theory or policy. So, depending on your research purpose, case studies can take different forms. So, let us explore the most common types. So, I am listing out here three major types of case studies. So, one is descriptive. Descriptive means documenting a case in detail, like Kingfisher Airlines collapse. And the second one is called instrumental, that means using a case to shed light on a broader issue like Paytm for digital finance. And then the third one is comparative, that the comparative case study approach, that means examining multiple cases side by side, like Ola versus Uber in India. So, each type serves different purposes, from storytelling to theory building to pattern recognition. So, let us look more closely at each of these. First, begin with descriptive or intrinsic case studies. So, the goal of descriptive case study is to generate rich multi-angle understanding of a specific phenomenon in context. For instance, what happened, how it happened, and with what consequences. Then we need to collect information on the timeline of these events and various decisions in the process, and we also need to collect stakeholders' perspective on this issue and artifacts, and also we need to gather sufficient, robust and credible numbers. So, when to use descriptive or intrinsic case study? So, mainly we use when we want to study about an issue which is more novel and it is very complex, and there it also involves stakeholder learning, which are all primary to this issue. For example, the Airtel Payment Bank illustrates financial inclusion by showing how telecom network can deliver banking services. And similarly, Jet Airways collapse shows how debt, competition and poor management together cause the downfall of a major airline. So, the strength of this type of case study lies in storytelling and generating more insights on the problem. It helps us see how complex forces interact in practice and then affects the outcome. Beyond description, that I mentioned, the descriptive study, beyond description we can use case as instruments to study broader issues or compare multiple cases to see patterns. So, let us examine these approaches. The second one is, as I mentioned, instrumental approach. So, an instrumental case study uses a single case to explain something larger, to build or test theory. So, here the goal is to uncover mechanism or boundary conditions. So, for example, if you are studying Amul case, it highlights broader lessons on cooperative models in dairy, not just alone in the Amul firm's case. It has broader implications. Implication is for the cooperative models dairy business. Case selection is key here, whether typical or critical. And about the method, it also often mixes qualitative and simple quantitative evidence while considering rival explanations. So, overall the value lies in drawing theoretical implications that go beyond the case itself. Then moving further about the third types of method, that one is the comparative case studies. So, the comparative case studies place two or more cases side by side to control variation and draw stronger causal inference. So, two common designs are followed in comparative case studies. One is called most similar design. In short, we call it as MSSD, means a similar context, but different outcomes, which helps identify key differentiators. And the second one is called most different system, MDSD. So, here MDSD means is very different context with the same outcome, which isolates common drivers. So, cross case tactics like replication or comparative tables make the findings more robust. So, unlike instrumental case studies that use one case, in the case of comparative case studies, the comparative design strengthen generalization by systematically examining several cases. So, once the type of case is decided, the next step is to investigate the case situation itself, and often we begin with financial analysis. So, in comparative case studies, so I think some more points I need a little bit more elaboration. We start with outcomes and we want to explain and then choose cases using purposeful strategies, not just convenience. So, the cases must be comparable in measurement and time frame, and we usually keep the number small, around 3 to 8, to balance breadth with depth. Finally, we must justify why these cases were chosen and make sure access and ethics are addressed upfront. So, once the type of case is decided, the next step is now to investigate the case situation itself, and often we begin with financial analysis. So, that means when starting with a business case, financial analysis is often the anchor. For example, studying Tata Steel Europe's turnaround, it requires first examining its financial health before and after restructuring. So, were profits improving, were costs declining? So, these are all the issues we would like to know. For this, we need to go through the financial metrics, and for which we need financial analysis. So, numbers provide the factual baseline before connecting them to the leadership, management and external market conditions. So, let us outline the basic steps in financial analysis that make this process more systematic. So, let me list out financial analysis steps. So, essentially there are 5 steps. One is examine historical income statements and balance sheet. Second one is compare them over time to spot trends. And the third one is calculate year to year changes in key categories. And the fourth one is express these changes in absolute terms as well as in percentage terms, and adjust for inflation if it is required, because when you are doing overtime analysis, you need to adjust this with inflation, where you can use the consumer price index as one of the inflation measure. Suppose for example, a 10% sales growth in retail chain may shrink to just 2% real growth if inflation is 8%. So, these steps prevent misleading conclusions. So, once the basics are done, the next step is ratio analysis, which allows meaningful comparison across metrics. So, I am again listing out several important metrics that have been widely used in the ratio analysis. So, ratio standardize performance, letting to compare across time and across companies of different sizes. So, for example, net profit margin is more revealing than net profit in rupees. Ratio cover, I have listed out clearly here, liquidity, profitability, activity and leverage, giving us a 360-degree view of financial health of the firm. So, let us begin with the first one, the liquidity ratios. So, you please go through this table carefully. So, you can see the first column, it lists out key liquidity ratios that are being widely used in the analysis. One is called current ratio. The current ratio means can assets cover liabilities. So, a ratio of 2 is considered safe. So, the proper definition I have given in the second column, and the third column how is expressed all are explained. So, then moving further, you can see the quick ratio, this is also called as acid test. So, here the quick ratio, it excludes inventory, testing liquidity more strictly, and this has been measured by using this formula, that the current assets minus inventory divided by current liabilities. Then the third ratio is cash ratio. Cash ratio focuses only on pure cash and equivalents, and is calculated by inventory divided by current assets minus current liability. So, the current assets and current liability means the net worth. So, you can see inventory divided by the net worth, that is the inventory to net working capital ratio. Cash ratio. Cash ratio means cash plus cash equivalents divided by the current liabilities of the firm. So, some examples here, during COVID-19, firms with stronger liquidity like Infosys, they managed better, while weaker firms struggled to survive. And beyond liquidity, firm must also generate profits. So, let us look at the profitability ratio, which is in the next slide. So, we have several ratios coming under the profitability ratio. This assesses how efficiently revenue turns into profit. So, you can see here is that the net profit margin, gross profit margin, return on investment, shortly ROI, and then ROE, and earning per share. So, for instance, the gross margin, it denotes efficiency of production, and the net margin is the ultimate bottom line, and the ROA, that is assess the profitability related to its assets, and the ROE, it measure profitability relative to its equity, a key measure for investors. And finally, the EPS, that it measures profit per share for shareholders. And moving to the third type of activity ratios, you can see inventory turnover. The formula is given here. It means net sales divided by inventory, is normally explained in expressed in decimal terms. And then the days of inventory, that means inventory divided by cost of goods sold plus 365. It is expressed in number of days. And we have other ratios. You can see here that the net working capital turnover, then the asset turnover, fixed asset turnover, average collection period, accounts receivable turnover, accounts payable periods, and days of cash. So, the formula for each of these are given here, and the interpretation also given here. And I would suggest you go through this and get a better sense of what these activity ratios means, and how these are all going to help in your case study analysis. And moving to the next ratio, that is called leverages ratio, as well as other ratios. So, here the leverages ratio measure reliance on debt. So, while market ratios show investor sentiments. So, again I have given here each of the ratio is listed out here, debt to equity ratio, long term debt to capital structure, times interest earned, coverages of fixed charges, and current liability or equity. And the formula also given here, and the detailed interpretation explanation is given in the last column. So, example here is that, for example, the Vodafone Idea's high leverage, high risk, by Tesla's high P/N/D shows investor optimism despite weak profits. So, to case study analysis is one of the most insightful tools for understanding real world organizational and social issues. Its strength lies in depth rather than breadth, helping us understand not just outcomes, but the how and why behind them. So, we have seen different types of case studies, including descriptive case studies, instrumental case studies, and comparative case studies, and each serving a purpose. So, we have also stressed systematic methods. That means there should be a clear research question, and there should be multiple sources of evidence and careful interpretation of the data and analysis. Case studies are, as I already mentioned, we have seen these are context specific and not always generalizable, but when used well, they generate powerful insights that can shape both theory and practice. So, the key takeaway for you as future managers and researchers is this: use case studies when you want to go beyond surface level numbers and uncover the deeper forces shaping outcomes. Dear students, as we come to the close of this 40 session journey on economic environment and business strategy, I want to sincerely thank you for your participation and engagement. So, your curiosity and commitment have made these sessions meaningful. I wish you all the very best for your upcoming exams. I am confident that with your preparation, you will do well. So, more importantly, I hope you carry forward the insights from this course into your future academic, professional, and personal journey. So, stay motivated, keep questioning, and keep learning. Wishing each of you very all the success and happiness ahead. Thank you very much.